Hello, WealthTubers. Welcome back to the WealthTube channel, your go-to source for the latest financial insights and stock market tips. Today, we're diving into a hot topic, best stocks to buy now, June 2024. The S&P 500 has been on a roll, following a stellar 2023 with another quarter of solid gains to kick off 2024. Despite earlier concerns about inflation, high interest rates, and a potential economic slowdown, the market has shown resilience. The S&P 500 has achieved back-to-back quarters of 10% gains, a rare feat we've only seen 8 times since 1950. January even marked a new all-time high for the S&P 500, the first in 2 years. As we move into the second quarter of 2024, investor optimism remains high. However, it's worth noting that the New York Fed's recession probability model still estimates a 58.3% chance of a U.S. recession within the next 12 months. So, while the market is performing well, we need to stay vigilant and informed. To help you navigate this volatile and unpredictable market, Bank of America has recently compiled a list of their top stock picks for now. Let's take a closer look at these 9 best stocks to buy in June 2024. 1. Spotify Technology SA. Spot is the largest independent provider of streaming music and expanding into podcasts. Key financial metrics include a forward P/E ratio of 40.4, a price/sales ratio of 3.9, and a 3-year average annual revenue growth of 19.1%. Analyst Jessica Reif-Ulrich highlights that Spotify's recent restructuring, including a 25% workforce reduction, should improve gross margins, operating income, and free cash flow. She projects mid-teens annual revenue growth through 2026, with gross margins potentially reaching 30% plus in 2 to 3 years and 35% longer term. Bank of America has a buy rating and a $315 price target for Spotify, reflecting confidence in its growth prospects and strategic direction. While the company shows strong growth potential, its high valuation indicates that achieving projected growth and margin targets will be crucial. 2. The Progressive Corporation, PGR, is a leading U.S. provider of auto, motorcycle, and commercial auto insurance. With a forward P/E ratio of 17.4 and a price/sales ratio of 1.9, the company shows reasonable valuation metrics. Its 3-year average annualized revenue growth of 13.2% reflects strong performance. Analyst Joshua Shanker highlights that the U.S. auto insurance market is in a significant pricing cycle, with prices up 38% in 2 years, driving more customers to shop for better rates. Progressive's strong brand recognition, broad distribution, and efficient cost management position it to gain market share from this trend. Bank of America's buy rating and a $265 price target underscore confidence in Progressive's growth potential and market position, suggesting it is a compelling investment opportunity. 3. Alphabet Incorporated GOGL, the parent company of Google, Google Cloud, and YouTube, is a global leader in internet search and online advertising. With a forward P/E ratio of 19.8, a price/sales ratio of 6.8, and a 3-year average annualized revenue growth of 17.3%, Alphabet demonstrates strong financial performance. Despite underperforming its peers in 2024, analyst Justin Post believes Google's Gemini AI model could boost user engagement and monetization. Upcoming events like Cloud Next and Google I/O, a potential acceleration in the online media sector, and improved expense efficiencies are seen as catalysts for growth. Bank of America has a buy rating and a $173 price target for Google stock, reflecting strong confidence in Alphabet's growth potential and strategic initiatives. 4. Intuitive Surgical Incorporated, ISRG, specializes in the Da Vinci surgical system, renowned for its advanced robotics in minimally invasive surgeries. Despite a high forward P/E ratio of 54.0 and price/sales ratio of 19.4, the company boasts a robust 3-year average annualized revenue growth of 17.1%. Analyst Travis Steed anticipates that the success of ISRG's new Da Vinci 5 system could prompt upward revisions in earnings estimates for 2025 and 2026, potentially bolstering the stock. He argues that ISRG's expansive total addressable market justifies its premium valuation. Bank of America holding a buy rating and setting a $450 price target, reflecting confidence in the company's growth trajectory and technological leadership in healthcare. 5. Tapestry Incorporated, TPR, designs luxury accessories under brands like Coach and Kate Spade. With a low forward P/E ratio of 9.5 and price/sales ratio of 1.5, combined with solid 11.4% 3-year revenue growth, the stock appears undervalued. Analyst Lorraine Hutchinson praises Tapestry's strong margins and cash flow, anticipating benefits from its $8.5 billion acquisition of Capri, CPRI, owner of Jimmy Choo and Michael Kors. Bank of America rates TPR a buy with a $52 price target, citing strategic growth potential and favorable financial metrics. 6. TopBuild Corporation is a leading U.S. commercial insulation installer and distributor. With a forward P/E ratio of 17.6 and price/sales ratio of 2.5, the company shows strong financial health. Over the past 3 years, TopBuild has achieved an impressive 22.8% average annualized revenue growth. Analyst Rafe Jadrosich anticipates margin expansion driven by productivity improvements, a favorable pricing environment, and acquisition synergies. Growth in single-family housing starts is expected to boost demand for fiberglass insulation, while opportunities in the spray foam market add further upside. Bank of America rates BLD as a buy with a $475 price target, reflecting optimism about TopBuild's growth prospects and strategic initiatives in the construction sector. 7. Citigroup Incorporated, C, is a major U.S. bank and diversified financial services provider with a forward P/E ratio of 8.6 and a price/sales ratio of 1.5. Despite a modest 3-year average annualized revenue growth of 2.9%, analyst Ebrahim Poonawalla views Citigroup stock as attractively valued, especially given the company's target to achieve a 10% return on tangible common equity by 2026. Poonawalla highlights Citigroup's ongoing restructuring efforts aimed at improving operational efficiency and anticipates potential for increased share buybacks, which could enhance shareholder value. He believes better visibility into Citigroup's core earnings trajectory could narrow the perceived risk gap and lead to a re-rating higher in the stock. Bank of America supports this outlook with a buy rating and a $65 price target, underscoring confidence in Citigroup's strategic initiatives and growth potential in the financial services sector. 8. The Kraft Heinz Company, KHC, a global leader in consumer packaged foods and beverages, maintains a forward P/E ratio of 11.0 and a price/sales ratio of 1.6, with a modest 3-year average annualized revenue growth of 0.2%. Analyst Brian Spillane highlights potential for improved year-over-year growth as Kraft Heinz laps reductions in SNAP benefits from 2023, which could boost performance in the second quarter. Spillane considers KHC stock attractively valued and expects the company to meet or exceed Wall Street earnings expectations. He anticipates that a positive uptick in volumes could support the stock's valuation and attract investor interest from other underperforming consumer staple sectors. Bank of America supports this outlook with a buy rating and sets a $40 price target for KHC stock, indicating confidence in Kraft Heinz's ability to capitalize on market opportunities and deliver shareholder value. 9. Fidelity National Information Services Incorporated, FIS, a leading provider of financial technology solutions, operates with a forward P/E E ratio of 13.5 and price/sales ratio of 4.4, despite a recent 3-year average annualized revenue decline of -8.0%. Analyst Jason Kupferberg highlights FIS's strategic sale of its majority stake in WorldPay, which positions the company for significant recurring revenue and aggressive capital returns. Anticipation surrounds FIS's upcoming Investor Day event, expected to clarify its post-divestment strategy and potentially bolster the stock. Bank of America maintains a buy rating with a $79 price target, indicating confidence in FIS's ability to deliver shareholder value through streamlined operations and robust capital return initiatives. These are the top stocks to consider as we navigate through June 2024. Stay tuned to WealthTube for more updates and insights to help you make informed investment decisions. Don't forget to like, subscribe, and hit the bell icon for notifications on our latest videos. Happy investing!